Good morning, traders. Darnell Price here. Thank you for tuning in to another episode of Momentum Movers. Exciting week. Well, might as well get right into it. This exciting week we have ahead. Starting off like always, building context around the price action to come. We have to frame out price first with, just taking in consideration of what economic news could inject volatility into the markets, where that injection may occur. You would get around bigger news events. So looking right into it, and let me get my drawing tool. It does help to excuse me, sorry about the I just needed this. All right, but I'll make sure it's working. Good. All right, so where was I? Oh yeah, economic news. That of course at this point we are more than aware that when we consider, now we're on last week's news. Sorry, just to build up to where we are now. But when we consider, the advanced GDP coming in a little bit hotter, when we consider flash PMI, right, different inflation reads coming in a little bit hotter than previous and forecasted on all of those. We have unemployment claims. More people are making unemployment claims. That's bad generally, for in a humanitarian instance. But as far as the economy and what Jerome Powell is looking for, may not be considered so bad. However, we have a advanced GDP coming in hotter. We have a lot of numbers basically coming in hotter. I think that's what we should glean as far as the sentiment around what Jerome Powell would be thinking about when it comes to interest rates, whether he would want to hike rates, keep them the same, or cut, right? He has no dire need to cut. He's signaling that he would like for rates to remain higher for longer, exactly where they are for longer, right? But I would argue that, when you start considering numbers that are, and we could go back even a further week, right? When you have core retail sales, when you have all of these inflation reads, and you don't have to even look at these numbers when it comes to inflation. Anybody who's alive amongst the living, unemployment, there's a lot of room for him to hike rates. He wants this number, unemployment claims, to go up, right? That's his goal. That sounds counterintuitive. However, one way to extinguish demand is for people not to be making money, to be able to spend, to have that demand, right? Like, they're not able to do so much with supply side, right? With all of the events happening overseas, there's a supply constraint. So that means that there are two things that drive price, right? Price is, it's supply over demand. So as supply increases, price will, it should be demand over price, right? Let's change that. Price would be demand over supply, right? As supply increases, price would decrease. As demand increases, price would increase, right? So yeah, this is and that's ugly, but pretty much demand over supply is what would equal price. So in our case, the supply is constrained, right? The denominator is small, and when you have a smaller denominator, whatever the equivalent is, it's big, right? We're not going to get into a math class, but basically that's what's going on with the economy. We can't really control supply and get we get the supply needed to meet demand over here. But what we can do is, increase the unemployment rate, giving people less discretionary income, thereby extinguishing demand, making prices go lower. Right, that's what Jerome Powell. Those are the two things he could do. At that, or he could play with the interest rates, thereby making loan demand less. Right, in the economy, banks would have to charge more. Money isn't free anymore, so higher interest rates on mortgage loans and lending rates. Right, if people keep making the same amount of money, if they have to pay more for credit, that loan demand goes down, and then also the demand for goods and services with funds purchased by those loans, if that makes sense. We'll probably, if I get any comments or anything that people listening would like to talk about, that kind of, but I'm just gonna take for granted that everybody's abreast on economic factors, and just to understand why these numbers, they could be green and look good but still not be good for bullish price action going forward. So getting back until this week, the 29th through November 4th, this week coming up, we have some exciting news coming up. Of course, we have further unemployment. We have the Chicago PMI. That's usually important. More unemployment data. He's going to build a picture about, concerning unemployment. But this is where, well, I didn't mean for that to look like that. But this is where I guess it's kind of fitting. This is where the markets might get fucked, right? Let me take that off, though. I didn't mean for that to look like that. However, that's exactly what we should keep our mind on, is these three things on Wednesday, right? Well, he's signaling higher for longer. He's signaling no rate cuts. Well, we get that decision on Wednesday, the 1st of November, right? And we also, going back into, and anything he does there will be supported by these news events, that follow. And so basically, we have a recipe for, so staying objective, I'll just mention that news, and we'll talk about how I feel about it after we look into the chart. So just know that we have a loaded week this week. A lot of red news events starting Wednesday. Not much at all on Monday. Nothing on Monday. So as far as posturing, that time, if you want to repair any damage done to the charts to the downside, if you want some two-way trade and consolidation, we should get that on Monday, right? We should start, squaring loose ends and coming into more of a trend on Tuesday. By Tuesday afternoon, 2 p.m., that trend should be established, right? If we are chopping on Monday and Tuesday, so Monday, we have room to go up if we're gonna go up. Tuesday, we have room for two-sided trading, right? Wednesday, we have room for a direction either way, right? I'm not gonna talk about direction just yet. And Thursday and Friday, we have room to cement that direction. But that's, if you could tell, this is what I'm leaning towards, some more red price action. I don't see us going up, right? And we'll get into the charts in a minute. This was the economic news. Let's go into the earnings calendar. Let's see what we could see here. Okay. So starting off, as far as notable companies of interest, ones you would want to pay attention to, of course, there's McDonald's. If you want a good inflation read, if you want a good, what does middle class to lower class earners in our economy, how they're spending, and also around the world, right? McDonald's, they have different cuisines for different places, different cultures. If you want a global snapshot of what consumers are doing around the world and domestically. McDonald's is a good source for that type of information. If you want to know what data centers and all of these server farms are storing, you know, if there's an increase in demand for data storage, i.e., if people are training models for AI and things like that, you know, if you want to know about that kind of demand, Western Digital would be a good one. If you want to know how companies are XPO Logistics, that's mostly intercompany transport. They yeah, but if you want to know how goods are moving around the continent, that would be good. Um, that's all pretty much that I would pay attention. I guess if you want to know about public storage, so if people are putting their stuff in storage, they're leaving their houses, you want a snapshot of the housing market. Believe it or not, you know, when people leave their houses and can't afford to go directly to another house, they put their stuff in storage. So if storage demand is increasing, you know, people are reconsidering. You know, I would imagine that public storage should be going down. If people have a good house, they'll want to hold on to. And now renters, I would just watch it. Just you know, grab your popcorn and see what information you could glean. Of course, on Tuesday we got AMD, we have Pfizer, we have Caterpillar. For all the obvious reasons, those three. And then Amgen, yeah. That's about all on Tuesday that I would pay attention to. CVS, maybe. PayPal, maybe, as a payment processor, may be good. They are, they are the premier payment processor over your Square. You know, they've been around the longest. Also, you know, little known fact, created by Elon Musk and sold off, prior to Tesla. Qualcomm, of course. Most definitely. Qualcomm, Airbnb, maybe. Just some good ones to watch. Apple on Thursday. That I did not know Apple reports Thursday after the close. So yeah, if there are two big events, it will be Apple after the close, and it would be Wednesday's unemployment number. Yeah, so I would say that until these 2 days occur, markets may be in a holding pattern. But Apple after the close, that will be big, considering the weighting they are of the S&P 500 and the Nasdaq. You'll want to be paying great attention to Apple after the close, and then earnings week dies off into Friday, noting that nobody really wants to come after Apple. Okay, and so I think that pretty much takes care of the earnings picture. We'll have some big news Monday. So Monday will be driven by, like I say, you'll get some repair and two-sided trading on Monday. You may get some info into the chip sector. Just get some posturing on Tuesday and Wednesday. Nothing really before Apple, nothing really after Apple. Apple's the big, and we may take a look at Apple after. Yeah, let's go ahead and take a look at Apple's chart and see what we could see from there. Get rid of all of this, right? Let's see, Apple AAPL. Yeah, so Apple chart wise, and let me look at it from the lens of my traditional chart and not just see here, see what we could see. Just off inspection, what stands out to me would be, I don't like this MACD here. It's very bearish. We're breaking down. Oh, this is a 3-day, but even on a 3-day, target, I would be looking more like, let's get rid of that but I would be looking more for 160. Apple trading around 160 in the near future. Let's look at the daily. My fingers are fatter than normal today. Okay, so let's hide all of that again. Yeah, Apple was at support on Thursday. It's a little bullish sentiment. I could see Apple at most retracing to here. I don't think Apple will break. Let me get a straight line out. Where are my straight lines? Here. Turn off that magnifier. I don't see Apple going above 175, but in the near term, I do see Apple coming down here to this purple line at 160. So if I had to put a path on Apple, let's see, let's mark off the week first so that we could see when a move would transpire. We would be looking at when is Friday? What date is Friday? The 4th. So we would be looking at right here, Friday the 3rd. Somewhere in here. Hold on, give me a second. All right. So I really don't see. I think Apple's gonna disappoint, honestly. I don't see, and I guess we could. So that would be saying that Apple would come up here, and that would be for the end of the week. But I see Apple more coming down there. Apple can retrace. Let's see. Apple is a bit of an enigma. You know, Apple's not going above 175 in the near term, but Apple's target is this right here, repairing this indentation. This has to be repaired. Apple's long-term target, where I would not buy Apple based just, strictly on the charts until Apple comes down here to 153-ish, 150, 155 area. Ideally, you don't buy Apple until, just technically speaking on the charts alone, you cannot look to buy Apple until it's retest down here. Really, you want to buy it lower, right? You would be looking for something under here so you could buy it at a discount. Anything above this pink MA is buying Apple at a premium. So yeah, I see Apple, and I mean you could game it out game theory wise as far as why Apple would be bearish when you consider their relationship with China, and China's not being so much of a purchaser of Apple products, right? You could see why their demand is being destroyed. So yeah, I would, they've released a product that's not too dissimilar from what Samsung has to offer. So domestically, I could see demand waning. There's no, I'm not going to become an Apple basher, I promise. So we'll just leave this alone and just talk about the charts alone. Apple seems like they may be in trouble. There's areas of the chart that need to be repaired. If you want to know what I mean, you could see, when you get this indention into this channel, you usually see bearish price action, right? That's just strictly what I mean by that. Let's go. I think we spent too much time on Apple. I was just trying to, this video would do good to be edited, but we're not. Yeah, let's look at Tesla too while we're at it. Let's see where we're at with Tesla. Tesla. So Tesla is sitting on that daily support of 200. I don't see Tesla going above the 224. However, Tesla could come down here to the 187s. That would be a good place. So just consolidating in this channel like it did previously back here. You know, long term, if you ever saw Tesla down here at 116, you load up, you back up the truck. If anywhere in the next year and a half you saw Tesla trading at 116, 120, that's where you buy Tesla. I mean, you go all in. This is the optimum place to long Tesla. Here, I think the breakdown is just starting. You know, we could get a swift sell-off retest lower going, you know, that would be like January, February. If you find Tesla lower, you know, that'd be the time to buy it. Here, you're still buying it right at what would be a premium, right? This is premium above, discounts below. So right now, even though Tesla has had a precipitous sell-off, you're still buying it at what would be a premium. Buying low constitutes buying at a discount, at discounted prices, not just because the candles turned red for a few days. No, you want a significant retrace from its previous price action, a couple ATRs, average true ranges away from the highs, which would be you know, anywhere in this area. Start looking to buy, you know, 174, and you become more aggressively buying as you approach 150 all the way down to 115. That's where buying the dip, scaling in would come in, these three levels there. In any case, let's see, we have AMD, the same AMD. All of these, you know, we're getting acceptance into channels, and we're looking for lower. Nvidia, same. We need some repair down here. Nvidia target, I would be looking like in the 200s. So we'll get this gap fill plus, and we'll start looking at Nvidia around 200. Right? Google held up but breaking down. You got to be looking for 105 on Google, right? At the earliest. Ideally sub $100. Netflix, a bit weak right here. It's about to get acceptance in there. I would be looking, you know, all of these tech companies, tech is not where you want to be, right? And so that said, I would say it's time to get the heck out of tech. Apple, when I put it in context with the rest of tech, Apple doesn't look good at all. I would not be looking along Apple above 150. And you know, that's at least 10% lower. I would, but honestly, you know, I just would not. I would be looking to get out of Apple and to start looking at buying cheap Tesla, right? Cheap Nvidia, right? I think they have the innovation that Apple has been lacking over the years. Not saying that Apple can't innovate, but they have no innovators. Not like, you know, if you had parked and made money on this whole run, you know, Apple run up, on the basis of its innovation, I could see it, you know, this turning into a stagnant sideways channel, and you could go a few 10 years without breaking these highs, right? They have no catalyst to break those highs. Whereas you have, you have Elon Musk and Tesla, and you have Jensen Huang at Nvidia, you know, You have Google, yeah, maybe. They are a store of information, right? And information is power, and money is power. So they are a store of money in that sense. That's how I look at Google. I'll forever be bullish Google. Um, you have Microsoft. They're owing a lot of debt, tax debt, and it's like a significant portion of their own cash balance sheet. If we're going into a recession, I don't see Amazon popping up anytime soon, right? But things are looking recessionary. So with Amazon breaking below, the 200, just now getting in discount territory, but still needing a repair structure, I wouldn't be looking so long on Amazon. Meta here, it's been holding up nicely, but just technically it needs to make a retrace. I'm not saying that this all happens. None of these forecasts, I'm not saying are gonna happen on this week, but on this week's worth of trade. But just going forward, it's good to keep that in context, that the upside is muted, but we have technical repair that needs to happen on the charts, right? Like, you see how it was technically disjointed here. We still traded in a downward direction, but ultimately it got the repair necessary. I feel like this downward direction, though, this downward repair, we're not gonna get too much upward trajectory on that. And you'll know when it happens, right? Because if Meta starts trading north of 309, then you could see a sustained rally. But as of right now, I'm thinking Meta breaks the 270s, and we start seeing prices around 235 in the near future. Okay, so we have a beat on tech. Let's take a look at the NASDAQ. The NASDAQ, based on our assessment, we've looked at the heavy hitters in tech and decided, or I have at least, that downside is imminent. More downside is imminent, right? That's pretty much what I got out of everything. That said, there are a few spaces on the chart that catch my eye. So let's go back over here to where I was drawing it. So yeah, we left balance. If I had to say that there were a few spaces on the chart that catch my eye, I would be looking like right here. I don't want, for me to remain a bear, I don't want us to break, what is this, 14,476, right? I don't want us to break this level here. This would be where I start my bearish thesis starts to wane. As far as a target, and we could look smaller and more granular to see, I really would, starting early on Sunday, I'm looking to, once we start looking like we're getting better acceptance below this level of 14,242, this is where the bears come back on parade. This is where the sell-off should start happening. As far as a precipitous drop, and we should be targeting as far as a target. Now let's go to downside targets, right? So okay, let's look at like a 6 hour. Yeah, see, in the near term we would be looking for in the 13.9s. However, by end of week, I would be looking, where's my line? So for an end of week target, or at least a target for a low, I would be looking down here. Right, that would be my target. to the bottom, to the downside. And as far as, you know, confirmation, I would start trading for that on a break of 14,242, right? This level here, is that 14,242? 14 threes up in there. Give me a second, let me get that exact. 14,242. Yeah, this number here. Maybe I should change it yellow so that I'll know it matches that. Okay, that's where I would be looking to start short. This is where my target would be. It may go lower, it may not get there, but this is where I'll be aiming for an end of week trade, right? Is the 13 threes. And as far as my stop, the area where, you know, I will not be trading, you know, you may want to go long. I'm not looking for the long side, but this area here is where I would stop out at. I would reassess things above here, right? So as far as a path to getting there, how do we negotiate the price action based on, you know, keeping things in context? What we need to do is also look at the VIX, right? That would also help with pathing. So, you know, we're still in the middle of what could be considered a ugly head and shoulders right there, right? If you drew a neckline there, we're just breaking out, right? We have a twisting of the MA's, possible expansion could be taking place on the VIX. That's the VIX futures. If we take a look at the actual VIX, you could see it in more detail, right? Like, so we should be looking at least a midpoint of this range at a minimum. I would think that over the next week's worth of trade, we could see a 25 on the VIX, and it would seem as if it could, you know, happen soon. I don't see the VIX going lower than 20, so VIX will be firmly inside of the 20s. Looking for higher 20s to 30s by the end of week. So keeping that in context, where are we with the dollar? If we were to take a look at the Dixie, so the Dixie has been basing out on the shelf, right here. It's in an uptrend, and, you know, upside, we have thin structure to the left too. When you consider that, you know, price will immediately accept and traverse that area, I would say that the level to watch on the Dixie is 107.765, right? This level here is where things get very bullish for the Dixie, and it will be bullish all the way up to 109, right? It will slice through the area in between here like a hot knife through butter. There's no resistance above this peak until you get there. It's a nice gap. So over the next week's worth of trade, especially in the middle of a Fed rate decision, I would expect us to, at the minimum, be touching this 107, 108 level. When I look at the Dixie like this, it makes me feel like the Fed is about to give us a big surprise, right? I could see us getting up here pretty quick. I don't know. I need to look and see what news is coming in the future, but we've had a run up. We've consolidated, and, you know, after consolidation, there is expansion. I don't think we're expanding lower. I think we're expanding higher. And if we're expanding higher, our next area of resistance is right here, and above it we have thin structure to, you know, roughly, I don't know how many percent that is, but, you know, 2%, we have 2% left the upside. Yeah, 2 to 3% left the upside in the Dixie before we have to contend with this heavy overhead structure there. So I'm expecting, further downside momentum this coming week in equities with upside in the VIX and the Dixie. That's what I would be looking for. And so that gets us back to where we were with pathing. Like how would this look? How may this look? What would I be looking for early on? I would basically be looking for this. So if I had to draw it out, it would be something like this. All right, so keeping in context that I don't see us just on horizontal TAs, filling this gap. I want this gap to remain above us for context. I would be looking for us to remain contained in this parabola, right? So if I were to get my arrows out, because if I remember right, arrows are better. Sunday and the Monday we may get a little bit of upside, but overall, I would like for us. Let me put the magnet thing back over here and here. If we break outside of this, I think we hold here, right? And we will spin until, can make our weeks. I think that will help also, because let's see, Monday starts trading there, and we get all the way to Friday close right there. Let's turn these red. Background none. Extend to the right, extend to the left, right. All right, so as far as what I would be looking for, I don't want us to go above there as far as trading. And as far as a target for the week, I think we could trade down here. So this is what I would be looking for. Little upside on next week. Let me make these lines bigger. So the middle line we could make dotted and decrease the thickness and the opacity, right? I just want it in the background. The borders we could make thicker and bring forward. All right, so this is next week's worth of trade. So yeah, Monday we have the opportunity for two-sided trade. So I'm not sure. I think Wednesday is our big day. Wednesday and Thursday. We need to highlight those on the chart, right? Those days are important. We have Friday. What was it? We have Jerome Powell Wednesday. I think I gave us too much time on this too as well. I put 2 weeks in here, but we should be looking for this Friday. All right, this is our area to be bound in. And I'm sorry that I'm talking my way through everything, just thinking about the context of what we just talked about, right? But the days that I want to be mindful of would be Wednesday at 2. Wednesday at 2, that would be 1400 hours. It's a 2-hour chart, so let's switch down to a 30-minute. Maybe we could get more granular. Okay, so this is what we're dealing with, this box. Okay, let's try it again. Wednesday at 2 p.m. my time, Central, would be 1400 hours right there. That will be notable. And then we have Thursday after the close, which would be around 1500. All right. So if these were going to be these events, these areas right here were going to be two of the, so we should work backwards, right? And then we have a whole day of trading on Friday, right? So I'll just work backwards. I would expect we may be a little bit below. We'll probably be somewhere in here. I would say we would probably be contained in this range. So let's go for that until Wednesday. Let's go for range bound until Wednesday. Let's give us a sign of caution right here, right? This is caution. This is caution. Let me edit this from this pasty pink to something more representative of what I'll be looking for. All right, we're looking for a caution in this range until here. All right. This is the area, and I don't want to see us below this area until we're ready to go down. All right, so if I had to draw it out, I would honestly like for us to just go down like that. That to me is the easiest trade. The market doesn't always give us what we want, so you know we could come down. Yeah, I'm really not sure on this one. I really don't want to forecast the path on this one because I think that path will become more available after we see where the week opens. Because we have resistance, but it's fairly close. We don't have much room. Like if you want to keep the optimum bearish momentum, you stay bound by this for majority of the week, right? And you could technically do that, but that's not even majority of the week because that keeps you in there. That gives you area for a bounce for Sunday. So maybe we dump hard, you know, Monday and Tuesday, and Wednesday we could bounce. Now maybe we get something from the Fed that's pretty dovish and that marks the bottom. That would be very helpful, right? Like, so I'm starting to like that idea. Let's see if we were to, so there's my weekly expected move. If we were to go to a daily chart, and let's just say that the Fed came in dovish and Apple had decent earnings, but that's at the end of the week, is it likely that we traverse, how far is this? So that would have us dumping until we get to around here, and percentage wise that would be a 6% over the course of 2.5 days. So Sunday, Monday, Tuesday, and then half of Wednesday. So you could get four days of dump and then a recovery. And that recovery, you know, it doesn't have to be like, you know, all the all-time highs, but it could cement us into a trading range that's lower outside of all of this, right? I could see that, because it allows us to maintain this structure that we would break. If we don't do it, this green para, if we don't, so if we're gonna go down, we need to use this downside momentum, right? And we don't have much room to the upside. Really, Thursday's high is that Friday's high is what we would be bound by, and we would hit that early on and sell off into the rest of the week, right? I think that's necessary if we're going to repair. If you remember, we talked about all the downside repair that needs to happen on charts in the NASDAQ for them to be bullish, right? You have to go down to go up. In that context, I mean, you want to make use of this downside sell-off. If you come outside of this, then it's choppy to the downside. And when you get to Thursday and Friday, or Wednesday or Thursday, I don't see choppy as far as the numbers being released, as far as Apple's earnings. So that leads me to believe that early on in the week, we get our downside and we get possible upside for the back half of the week. I will be pathing this in, and just as far as my degree of certainty, I will just go 60-40. There's a 40% chance we go ahead and break outside of this parabola, but all of my plays will be with the consideration that we hang tight in the parabola, right? If we break the parabola, it'll be something like here, and then we'll get some news that further cement parabola, something like this, right? Apple by this point wouldn't mean too much, right? If I had to, we could be by this point building, because I don't think we'll go straight down. If we want to say that markets wouldn't be going straight down, we could start building a rounded bottom, into some of this turmoil. But basically, I would say that markets are in turmoil, and this is what we would be looking for. I don't think we'll put too much price action above this white line here. I think if we do, it'll be choppy. And looking back, price action here is usually pretty swift, right? Once we break this yellow line, it's straight to the white line. And so, yeah, once we break this yellow line, it's straight to this white line. It's not, so we may get a little bounce going into early Sunday morning, 12 a.m. But after that, when London session opens, if we're not headed down, I think we should be. And that's what I see. Is there anything else to cover? I'm not sure. I mean, we could look at that, and if you want to talk about a canary in a coal mine, as far as market direction, look at the Russell 2000 small cap stocks. We're all, this was the COVID breakdown, where the Russell 2000 is negative for the year, right? The year opened January. It opened up there. We've been breaking down. It's the only one. I think the ES opened January. The January lows of this year, January 2023. We haven't made new lows yet, but we're approaching them. Of course, we haven't on the NASDAQ, but the Russell is making new lows for 2023, and it's retracing the sell-off of the COVID, of the sickness, the pandemic. I don't want to get censored for saying this big C word, but basically, since that, we have that drop from then. We're retracing it. We're retracing some of that bullish price action we had when they printed all that money and bought the dip. The whole, all of that's being retraced. So is it unlikely that, let me turn everything off. Is it unlikely that, with the Russell trading down here equivalently, right? Russell's way down here. Is it unlikely that at a minimum we could see levels, of support down here? It's not that far-fetched, right? Could the NASDAQ catch up to the Russell? Those are questions you need to be thinking about when considering, where we are with yields, crossing over 5%, right? where the Dixie is going, where the VIX is looking, where the majority of the stocks that we rode this rally up on, how they're looking technically, the demand for those, especially in China, the trade war we're fighting, the actual physical ground war we're potentially fighting on two different fronts. When you consider macroeconomic events and the charts and you put everything in perspective, it's not, you know, it's not too far-fetched to think that at a minimum we could retest the yearly open, right? You know, ES is you know, tanking right there. Could it bounce here? Yes. Could it go sideways? Yes. But you know, looking at the Russell, you know, our economy is built on demand from companies like the Russell 2000, right? Like you could have your Apples and Googles, but if small businesses aren't doing well, then you know we never get the wealth that trickles down, but our misfortune always trickles up. Put it like that. Anyway, I'd like to thank y'all for tuning in to another session of Momentum Movers. This is Donnell Price. Trade well, trade well, trade smart, and trade on. And I'll see you again on the next one.